The Nigerian stock market has been experiencing a period of growth, with the all-share index recording a value of 198 billion naira in May as the market capitalization hits 56.17 trillion naira. According to analysts, the growth has been driven by a range of factors, including the country's economic recovery, the implementation of economic reforms, and the increasing attractiveness of the Nigerian market to foreign investors. On the other hand, the global market have also experienced a period of growth, with major indices such as the S&P 500 and Dow Jones Industrial Average reaching record highs. Let's get talking. I'm being joined by an investment and financial advisor, Mr. Gbenga Ogunrinola. Good afternoon, Mr. Ogunrinola. It's good to have you join the program.
Good afternoon, Tolu. It's nice to be here again today.
Yes. The market here is pretty doing well. There's some flip-flop sometimes. This week there was a labor strike and all of that. But what's your reading or understanding of the fundamentals surrounding Nigeria's market at this time?
Yes, the market has been doing well since the beginning of the year. And if we look at it right from the year 2023, we also had a good year. And it's more like an icing on the cake in the year 2024. The year started with a lot of apprehensions, especially with the Ukraine war still not having a direction. Then you had the Israel and Hamas issue in the Middle Belt. And all that, kind of gave a lot of kind of no direction, in the markets and global economy generally. But now I think we're beginning to see some level of stability and things are beginning to shaping up. Since those areas are not seeing any escalation, we've seen the markets progress steadily, globally. Like you said, the Nigerian market has been doing very well. Currently, we have about over 32% year-to-date return on investment, which is quite good. And during this period of the year, after all the various companies have released their results, there's usually this lull in the markets, and we'll begin to see more activities again in the market towards the end of third quarter stroke the last quarter of the year. So I think looking at it holistically, the market is doing well, and we can only hope that it gets better.
It doesn't sound like that comedian that says you're doing well. So Nigeria's market seems to be doing well pretty at this time. Are we saying that the reforms instituted by President Bola Tinubu and, of course, his team, do you think it's kind of paying out? Talking about attracting investors.
Well, I wouldn't say that that's what is working in the favor of the market currently. When you look at the market, you discover that last year there was a kind of technical devaluation, and that kind of gave it kind of reduced what I would call the value in itself, of the markets. Particularly, you have the foreign investors who, based on that technical devaluation, add more funds to play around in the market. At the same time, too, when we look at the other side of it, we can see that one of the things that had been hampering the market developments in the past was the issue of foreign investors not being able to take away their funds anytime they want to, divest from the markets. And there was a backlog, that had been in the markets whereby a lot of foreign investors could not repatriate their funds back. And I believe that the government have been working on that, which kind of has given more confidence to the foreign investors to come into the markets. But looking at it holistically, I think it's just about the fact that there's general stability globally in the market, and based on that, and the fundamentals of the companies in the market too are quite good. So we see a lot of companies declaring good dividend and posting good returns on their accounts. So that has been very steady, over the past quarters, and this is what is playing out in the markets.
Mr. Grunola, staying with those figures you're talking about, particularly the banks, they'll always come up with those beautiful figures, and their shareholders are smiling to the banks to get some money regards to dividends. While I'd like you to talk around what we should expect maybe from other companies, let's beam our searchlights to the global market. It seems like all of these conflicts and all of that are not really shaping up the figures we are seeing from that market. Take us through that. What do you make of it?
All right. So, like I said earlier, that the global market generally has witnessed some form of stability. We are not having so much pressure in terms of maybe things happening in Ukraine, Russia, things happening in the Middle East. That has kind of given investors the confidence, to come out fully to invest, because at the beginning of the year, there was a lot of apprehension. And now, so generally, we see the global markets moving up, upwardly in the capital markets, particularly in the major foreign exchanges in the world. We see the year-to-date indexes, rising up. For example, in the UK, last year wasn't that good in the capital markets. But this year, so far, we're almost in the second half of the year. And so far, we see a lot of improvement. For example, the FTSE is about 6.8, 6.9 currently. The FTSE 250 is about 5.96% year to date, which is quite impressive. The Dow Jones is a little bit low. It's about 2.9 currently. But that is understandable because most of the stocks that makes up the Dow Jones average are stocks that are highly capitalized. And last year, they all had a lot of increase in their prices. So we are seeing a kind of a reshaping. There's this belief that majority of the major capitalized stocks, under the Dow Jones average are already overvalued. But yet we still see some level of movements. Then we come down to the S&P, which is still doing well. Is about 12.72. The Nasdaq is about 16.12. Then we have the DAX, which is about 10.7 year to date, which is also very good compared with what they did last year. So kind of cementing on what they did last year, building on what return they had last year. Still having a 10.77. It's not a bad one. And you have the CAC2 doing well, about 6.5. Then Nikkei 225 is also doing well, 15.63. So those major indexes, are quite impressive when we look at it holistically. And when we look at the general economy in the global markets, you look at the inflation rates, you look at the interest rates, we see that all those indexes and all those indices are also, they are all looking positive. And with that, we can only hope that things will get better, for bearing any surprises, from any of those hotspots regions that we had mentioned earlier.
Well, that really sounds good. We also expect the European Central Bank, I think there's been a decision with regards to this. But what do you think about the rate cuts that is widely expected? How will this also affect markets?
Yes, so I believe that the rate cut is going to help the markets because generally when with the high interest rates, what we have is a lot of banks paying investors, for holding their funds. Now, with that being cut, it's going to the funds are going to be channeled towards the capital markets that most of these stock exchanges, and that invariably is going to also help the stock exchanges to move up. So we'll see the funds being diverted from fixed income to the capital market, which invariably is going to help the capital market. So I think that there's already cuts in rates when you look at it globally. For example, in the German market, it's about 2.45. The interest rates. In the French market, is about 3.19. It's still the British and the UK market that you see have about 5.25. So generally, we see that they're already cutting interest, and they believe that because the inflation rates are also going down, they can continue to cut it lower. Most of the interest rates now is less than for most of the big major economies, aside from maybe the US that have about 3.5. The other economy is about 2.3, 2.4, which is quite impressive. Because I think about this time last year, most of them were almost in the probably two-digit region, but they've been able to cut it drastically. And I think that's what we need to be looking at in Nigeria, how we can also cut the inflation such that the economy will be able to have a new lease of life, and we can only get better even in economic development.
Interesting conversation as usual. Investments and financial advisor, Mr. Benga Ogurinola, live for us from the United Kingdom. Thank you so much. Do enjoy the rest of your day.
Thank you, Tolu.